Welcome back, and joining us on the show now is Mr. Rajiv Budhraja. He's DG at Automotive Tyre Manufacturers Association. Mr. Rajiv, thank you so much for joining us. I want to talk about the prices first, where we are looking at the global rubber prices now trading at a 6-week high. The Indian rubber prices have seen support as well. There is lower production estimates that have been thrown in by the rubber associations, whether it's about Malaysia, Thailand or Indonesia as well. What's the sense that we have on the rubber availability in India?
See, rubber availability has been seen to be on the tighter side, especially in recent days and weeks. One, because of, this is not really, we have just stepped out of the peak production season. So traditionally also this is lean season. And secondly, I think overall the way the climate is playing out, internationally, Southeast Asia, as well as in India, it has impacted, because the number of hot days is increasing, the day temperatures are on the rise, and in the long run, yes, it is impacting both the productivity as well as the availability and arrivals in the market. So overall, I would say we are moving into a situation of a bit of concern on the availability side now that the tire the demand is looking up. So perhaps an imbalance there could be a point of concern for the industry, consuming industry.
Rajiv, I know it's still early days, but would you have a number in hand of what kind of availability or supplies or production that we have seen in India?
See, our production last year also, what was projected in the month of February and March for the whole year, that had to be kind of, tapered down 2 or 3 times. And we actually ended up with actual production. It was 8.10 lakhs or something, which was much lower than the normal production which was envisaged earlier. Rubber Board comes out with 2 sets of estimates, one a normal estimate and an optimistic one. So we fell short of the normal as well. This year again, projections have been made for 23-24, and based on last year's experience, we feel that consumption is invariably or in most cases higher than what has been projected, and consumption trails, the production falls short of the projections. So that is a matter of concern.
So if last year was 8.10, what are we anticipating this time around?
I think if on the basis of normal, kind of monsoon and overall climatic condition, we should be looking at something like 8 lakhs or so. We don't expect any significant, northward movement on that. Whereas consumption is definitely going to go much beyond 13.5 or closer to 14 lakhs this year. So you can imagine that the gap is only going to widen in this fiscal.
And what is the kind of tire demand that we're looking at right now? Because China, which is a major consumer of this, has seen tire sales in the previous month on the higher side. The automaking for the month of March has increased by 15% as well. So what is the global cues coming like, and what kind of Indian demand as well that you're envisaging?
See, China domestically is now picking up. Thankfully, because of the overall infrastructure spend now, getting percolated to actual schemes and projects at state level and ground level where things are moving. The CV segment is also seeing good traction,
Right.
Passenger, as it is, as we know, demand side is extremely good. There are supply side concerns which still prevail. So I think all in all, overall on the demand side, we see a very positive and encouraging sort of, fallout for the natural rubber demand. With even with this GDP growth of, about 7%, we should be looking at 5 to 6% kind of NR growth on a YOY basis. whereas the production is pretty much stagnant as we have seen in the last 2 to 3 years.
So not such a great thing for the tyre makers, clearly, as the raw material price and availability both increasing.
All right, not such a great news, but we'll monitor how it goes. I mean, you know, a lot of people, whether it's EV or non-EV, all of them do require tyres. Thanks a lot, Mr. Budhraja and Manisha, for joining in and giving us the updates on that. With that, we wrap up on this edition of Halftime Report. As we take a short break, on the other side, you'll have Business Lunch, Take the Market Action for.